Okay, enough of that. Let's get into the market forecast for tomorrow and a little bit of review of today. It is May 2nd, 2023. We are going to be reviewing today's price movement for the S&P 500, and I am going to be forecasting what I believe will possibly happen tomorrow. Now, the first thing we got to go over is tomorrow is the one, the only. Hold on. Let's put this up here. The one, the only. You guessed it. FOMC. Okay, baby. Let's go. So, let's pull up the calendar so we can look at the red folder news, because that is what going to do what to the market? Drive volatility and find liquidity. Okay, is going to go to areas of liquidity, sweep them, and the markets will get very volatile. What does that also mean? It means that tomorrow is probably a no trade day, because the morning session is going to be very slow. No, with everybody knowing that all the movement's going to happen in the afternoon when FOMC comes out. So here it is, 2 p.m. FOMC statement, federal funds rate, and the one, the only FOMC press conference with who? Yours truly, Mr. Powell, the money printer man. Okay, what are we expecting? The previous was 5% for the interest rates. They're looking at a 0.25 basis point, a 25 point basis point increase on the interest. What is that going to do to the markets? I think we all know. But, at the same time, we honestly don't know in the short term. Because in the short term, every time this happens, especially when Powell gets up to speak, we see massive volatility, price swings, and it's definitely not a time you want to be in the market. But we can forecast where price could possibly go, and I honestly think things are looking interesting for this one coming around, because in my opinion, May is a very bearish month. If we go back to last May real quick, so March actually started the bearish trend, but May just continued it until the very end of May. We saw just a little bit of retracement, and then June was the same. And then July and through August was when we saw a little bit of bullish market movement. But if you notice where we're at in comparison to kind of last year's structure, is we are testing the waters, like there's a lot of old liquidity resting in certain areas. For example, here we've got some liquidity from all the way back from August 26th, 2022. This liquidity, August 16th, 2022. These are levels that we've been testing, or we're getting closer to testing. We actually haven't tested them yet. What we have tested was September 13th level. Okay, as you can see, look at these wicks. Let me zoom in on that for you. Look at the rejection. Absolute pristine rejection off of that. No candle over there is broken above. Only one candle broke above, and it came shooting back down. But you know what that means? That means I believe we're going to keep going higher before we go lower. But I don't think it happens for long. And I think it's more going to be a sweep than anything. Looking over here in the more recent price structure, we've got this area of liquidity obviously right here. We can get rid of this here, and we'll just throw in the liquidity that was made today. This is a sell side liquidity that when we go on a lower time frame, you'll see was an important level that it tapped. That's why I have this box here, but you know, you can't really see what it is at the moment. Okay. But what you can see is this daily order block that price tested into today, right here. Which is the same spot I've got marked. But there you go. That's your daily order block. Pull it down here if you want, but boom, price tested the order block. And it rejected straight off of that. Which means what for me? Well, in my opinion, and also look at what it did quickly. As you can see, Friday's liquidity, Friday's low got violated, but we closed above it. So on the daily, what do we see? This order block was respected, tapped into. Friday's lows were broken, but respected on the daily, closed above it. So on the daily, my opinion is that by the time we get to FOMC, there's going to be a lot of volatility. But I could definitely see something where, you know, obviously the volatility is going to take price all over the place. But I think maybe we come and test this again. And there'll be a lot of chop, but I think we come and finally take out that high. Now, that could be absolutely and utterly incorrect. We could open tomorrow in the pre-market or in the morning market, and we could actually test a bit higher, you know, get to, I don't know, you could say we could get, yeah, this isn't too many points to get probably up to here. Then we could kind of mess around, mess about, and then boom, sweep that and come plummeting down. Those are possibilities as well. The lower time frames are going to give us more narrative on what to really look at. One last thing to consider about why I feel bullish here, though, and why I believe the bullish sentiment is much stronger is, again, fair value gap. While it nearly penetrated below the fair value gap, at the end of the day, it closed above the fair value gap, respecting this area. This whole area here is a strong area, okay? You could call it resistance. You could call it what you want. It swept a lot of liquidity, closed above liquidity. And this is on the daily time frame. That is significant to me, which makes me believe that maybe we do test down here again in the morning and through London and in the morning. But ultimately, I think we come and take out the highs once and for all. We take these highs out because look at what happened. We made this high back in February. It tried to test it again and again and again and again and again. Almost tried to test it one more time. Tried to come up higher. No, no, no. Rejection. Almost. This is the first candle to close above. Again, this old high here back in September. That right here, that's significant to me. This is the first candle to actually close above, and immediately it rejects. But as it rejects, these areas down here, the sell side liquidity was swept, and an order block and a fair value gap inside of each other were respected on the daily time frame. That's very significant to me. I think we run higher. If we drop down to the 4 hour, we can get a little bit more information about what the market's presenting. But as you can see, what kind of happened over today was Monday, not much. And then Tuesday pops open. London's not doing a ton until boom. God candle. Again, though, as you can see, where does price respect? Price respects this, which is what? Well, liquidity sweep here, I believe that to be a breaker block. So price has now used this breaker block as support, bouncing off. We're running. We're running and gunning. Okay, there was liquidity right there. Barely closes below, and we come back up. That's significant to me, as well as, again, like I can get rid of that. So we can look at this. I can get rid of that too, honestly. Just to have a look. Look at this fair value gap. Completely respected. That's not a coincidence, okay? So price is strong down here. There's strong areas of rejection. We got a breaker block, a 4-hour breaker block, 4-hour fair value gap. We got a daily order block and a daily fair value gap. I mean, there's a ton of information here on why price should be going more bullish into tomorrow. Now, there is this fair value gap here, which is why I think there's potential that we go lower again before we go higher. And again, that's what you can expect. You know, you pull up your PD array. You know, there's an expectation that we can maybe see a bounce off of somewhere around this 50% area right here. Something like, you know, price could come up, then come down, then shoot up, you know, something like that. Anyways, let's delete that. It's ugly. Okay, jeez. Yes, price could come up, test that, drop down, sweep liquidity one more time. Maybe it doesn't come all the way down here. Maybe we just sweep this right here, this area of liquidity. And from there, we start to run. That's a possibility as well that I could see. You know, I'm not against that. I'd actually, if that happens in London and going into market open, I see a strong rejection off of this. I'd be willing to take a quick scalp. But at the end of the day, FOMC's there. I'm probably not going to trade it. I've not traded at all this week because of a lot of news, and with the news, there just hasn't been much opportunity to enter the market. Like today was really, I was waiting for a sweep of liquidity, didn't really get one, and price just kept slowly descending. And the only trade I almost caught was this small retracement here. I ended up not holding it. I just decided break even was fine. I was a little bit unconfident in that because I don't typically take that kind of a trade at this hour, which was really basically turning into lunch hour. So I was like, I'll hop out. But again, I mean, we can mark out this PD array. You know, that aligns pretty well with the 4-hour fair value gap there. Let me go back to the daily real quick and just look at if we are clearly in a premium if you're looking at it from the swing low to the swing high, which swing low here, swing high here. 50% was there. We're clearly in a premium. If you want to look at it more, this is more of the 4-hour, but we'll look at it on the daily. Swing low, swing high. Look where price went. Look where price rejected. Another reason, another area of confluence as to why I believe we're going to be going bullish. Right now, price is in equilibrium. Price is basically in fair value in this area. In this small area, price is in fair value. So that is why I'd like to see it displace down here, sweep some of this liquidity up, and then from there, FOMC pushes it all the way to the highs. And that's the external liquidity target, you know. But yeah, I mean, there's really not much more to forecast. I can drop to the 15-minute just to kind of see if there's anything pressing, but it doesn't appear to be that way. The trade I did almost catch was this fair value gap, I believe. Was the area that price was respecting on the 15-minute time frame from long ago, but it was never tapped into, and then it finally gets tapped into, and would you look at that? And so I was looking to take buys on the 5-minute time frame. After that, after all of, look, this is all the morning session. Here's market open. We went ahead and swept no liquidity, and instantly for the next 2 hours dropped an unbelievable amount. Okay, an unbelievable amount. So it is what it is. That's just what happens. You know, you can expect those things. But look, as you can see, there's remnants of my old entry. I had these highs that I wanted to break. They were broken, and I was looking to get a buy. And it was actually the right analysis. I just, I'm still working on trusting my analysis. It was a little bit more of an iffy trade. The reason I wasn't fully invested in this is because of the size. I mean, look, if I wanted to have my stop loss here, it would have been 133 points. Now, granted, I had my first take profit right here at this area of liquidity, and that did end up getting hit right there. But, I mean, you know, what can you say? You win some, you lose some. We're working on it. Going to continue to back test, continue to see what we can find. That was the trade I was looking to set up. But yeah, you know my bias for tomorrow. I'm looking for old highs to get swept through with the FOMC news and the major volatility that we'll be presenting. Maybe in pre-market and in London, like I said, we come sweep back down into this daily order block in this daily fair value gap right here, and kind of reject. And then as we get towards 2 p.m. Eastern Standard Time, we make our rise up. Now, do not trade FOMC. It is the worst idea in the world, and you will lose a lot of money. With that being said, signing off. Good luck to you guys. Let's make this money.